You know, a lot of people right now are thinking, do I buy Bitcoin or do I buy real estate? Real estate has been one of those assets that has basically captured the attention of so many people because it's the asset of the previous generation that has created the most stability in most people's wealth. So therefore, they've learned to trust it. It's almost like, you know, investing in real estate is almost like what's that experiment called? It's like falling in love with your captor. That's basically what it is, right? Real estate for the next 10 years compared to the last 10 years is going to be very, very different. And I want to talk about why, and I want to walk you through exactly what would happen if you invested in real estate versus invested in Bitcoin over the next 10 years. Now, this is, I want to walk through a tweet that I put out. It's at 360,000 views. I'm going to put the link to the tweet in the description so you can actually go and see the numbers and read through them if you so wish. So check that out. While you're doing that, you know, my goal here, just like I helped my parents do, is diversify some of their real estate holdings into Bitcoin, because Bitcoin will be a better return over the next 10 years than real estate will be over the next 10 years. And in order for me to do that, I really need you to subscribe, because if you subscribe, then it tells the algorithm, the faster you subscribe, it tells the algorithm, hey, you know, this is important information, needs to be in front of people. So I would appreciate it if you would do that. Now, let's have a look at an example of real estate versus Bitcoin over the next 10 years, right? We're going to walk through the philosophy of why people want to invest in real estate a little bit later, but I want to just bang through the numbers here quickly so you understand, and then we can start talking about it. Let's look at a $500,000 property that requires a $100,000 deposit, which is a 20% down payment on the property, right? At these current mortgage rates, you're looking at a $100,000 deposit, a $2,333 a month mortgage, and let's say over the next 10 years, this doesn't include any costs. This doesn't include any maintenance costs, any fix-up costs, anything. It's just basics of deposit and monthly mortgage. So let's have a look at the property value growth over the next 10 years. Let's say on average, based on, you know, the history of real estate, the value of that property is going to go up at an 8% CAGR, compound annual growth rate, over the next 10 years. So your total mortgage payments over 10 years is $279,960. Okay, the asset's going to appreciate at around 8% CAGR unless it's a property in a rundown area which is just designed for cash flow. So the total money tied up front, right, or not up front, but the minimum money that's going to be tied up into that property over the 10 years, minus costs and all this other stuff, is going to be $379,960, which is your $100,000 up front for your deposit and your mortgage payments over the next 10 years. Again, not including any maintenance, not including lawyers' fees, closing costs, none of that. This is just the basics, right? Versus, let's say you didn't do any of that, and all you did was take your $100,000 and put it into Bitcoin at the all-time high, not talking right now, the all-time high of $69,000. So let's just say you weren't smart enough to wait. You just piled in all-time high $69,000, right? One-time purchase, didn't do anything, just followed the 3 rules of Bitcoin, okay? At the absolute all-time tip high, where everyone's been saying, oh my God, you know, I could have waited, etc., etc. Let's look at what the return is going to be based on the history of Bitcoin and the forward projections. This means that you would have acquired just 1.44 Bitcoin at the 69,000 high with your $100,000 at a 10-year CAGR. So you got to look at what's the 10-year CAGR for the last 10 years. It's roughly 71%. I'm going to dip that by 20 percentage points. I'm going to say the next 10 years, because as an asset gets bigger, the CAGR is much, much lower. Let's say it only compounds at 51% over the next 10 years, right? 51% a year for the 10 years. By the way, the last 10 years has been 71%. So assuming that 20 percentage point dip on the CAGR between now in 2023 and 2033, meaning Bitcoin's going to compound at 51% a year over that period. Yeah, there'll be dips, there'll be highs, there'll be lows, there'll be market issues, there'll be moments where, you know, the ETF is approved and you suddenly see a massive jump in the CAGR for 1 year, and then, you know, there's a slowdown as it stabilizes and then it corrects, etc., etc. forget all of that. Just look at the overall 10-year return, right? 51% over 10 years. That means the final value of 1.44 Bitcoin after in 2033 will be $6.162 million. So let's just go with $6.1 million, right? From an initial one-time purchase of $100,000 of Bitcoin, instead of taking that $100,000, putting it into property at a 20% down payment, then paying a $2,333 a month mortgage payment based on today's mortgage rates. It is currently cheaper to rent than it is to buy property right now, based on mortgage rates at this point in time. And I'm talking about in the US, in Canada, in the UK, in the major nations. Okay, there is no amount of capital appreciation or cash flow wet dreams that can make real estate a better investment than Bitcoin over the next 10 years. It cannot happen. The juice has been squeezed from real estate over the last 35 to 40 years. It is the asset that everyone has dumped their wealth into. It's the asset that, because it's hard to liquidate, it's forced people to hold the asset. And then you've obviously got tax incentive schemes like the 1031 exchange in the US, where people are incentivized to keep their wealth inside of real estate and not liquidate it and move on to other things. But real estate has really underperformed the amount of money that's been printed. And now for the next 10 years, there is no amount of capital appreciation or cash flow wet dreams that can make real estate a better investment than Bitcoin. I don't care what anyone says. I see a lot of people tell me, what if I buy property, take the cash flow, buy the Bitcoin? Come on. You're going to put down some money on a property, right? You're going to put, let's say you're going to buy a shitty property with 50 or 60,000 down. It's still not going to kill. It's not going to beat Bitcoin's forward CAGR based on the adoption rate of Bitcoin and the amount of capital coming into the Bitcoin market. So I want people to stop getting duped. There's a lot of people getting duped right now by real estate YouTubers, real estate superstars, real estate people that are out here leveraging themselves to the fucking eyeballs, trying to buy as much property as they can, thinking that they can outperform and grow their wealth and all this else. The only thing you're doing with real estate most of the time, and I was in real estate, the only thing you're doing most of the time with real estate is buying yourself a job. Because if you actually, as a small-time investor, I'm not talking about someone who, generates $10 million of liquidity, then goes out and buys, 200 units at a time based on the leverage that they can generate on a $10 million of liquidity. I'm talking about the average person trying to get into one property, then get into another, the same path that my parents took, right? Same path that my parents took, trying to buy one property at a time, build up their property portfolio, etc., right? There is no way you are going to beat the returns of Bitcoin over the next 10 years. It is not happening. The real estate market has been squeezed and squeezed and squeezed, and the juice has been extracted from real estate at this point. In fact, for real estate to make sense over the next 10 years with the amount of money printing that's coming down, you're talking about the average single family home, being worth multiple millions of dollars. And then guess what happens, right? People start protesting because they can't afford the houses that they're going to live in. So then the governments get voted out. So do you think any government is going to allow any policies that allow themselves to get voted out? It's not going to happen. If you think that's going to happen, you're a moron or $1,000 net worth, or one or the other. At the end of the day, what's going to happen is governments are going to be incentivized to keep a cap on the property prices while they still need to print more money. So now property can no longer be the asset where all of that printed money gets sucked into, right? Once the money is printed, it has to go somewhere. Otherwise, it starts circulating around the economy and creating inflation, which is why the people at the top of or the closest people to the money printer, they're in investments. So why can the government trust to give them access to all this printed liquidity? Because what are they going to do? They're not going to go out and spend it. They're going to put it into the asset, which stores that capital, which doesn't allow it to move around, which means that it minimizes the inflation around the world. If they just printed that money and did what they did in COVID every time, which is print it and dump it onto the populace, suddenly you're going to be dealing with double-digit inflation for many, many years to come. So real estate is, at this point, a scam for most people. I'm not talking about the people that can afford to buy, $30 million apartments that are prime real estate, etc., etc. In fact, I was thinking about it. When does real estate make sense in order to generate at least returns that are going to keep up with the amount of money printing. You know when it does? When you have insider information. If you know that that there is a building that the government is going to want to take over and they're going to overpay you within a 1 year window, and you know that you can get access to that deal and buy it right now, great. Absolutely great. You got an insider information on that track. If you know, for example, another scenario where you're going to generate $10 million of not your liquidity and then be the service provider of people who want to invest in real estate, and you're going to create a fund for them to invest in, and then take that fund, buy a bunch of commercial units or commercial style units, and then generate and then basically build a business, right? That fund is a real estate business. That's completely different. You're not putting any of your own capital up front in order to do that. You're generating fees on it. It's a completely different scenario. I'm talking about the average person, just like my parents, who's sitting here going, I have, $100,000 to $500,000 of excess cash. What do I do with this? Do I invest in property? Do I invest in something else? Property is not going to make you any money over the next 10 years. Firstly, property has not kept up with the amount of money printing that's happened, and it's certainly not going to keep up with the amount of money printing that's going to happen. You have to look into the future. Property was the investment of the previous generation, my parents' generation, because property withstands volatility quite well because it's not liquid. It's going to take you 3 months to sell a property when the market is moving up and down. That's why property has had this illusion of safety of wealth, because you don't have the activity bias taking over. I personally believe that everyone right now needs to stop getting duped by real estate promoters that want to sell you, real estate courses and real estate education, and here's why you should get into real estate, etc., etc. The only way to make a ton of money with real estate at this point, without sucking yourselves in eyeballs of debt, without, going out there and just blatantly lying to people about the returns that you can have on a property deal, the best way to do it is to set up a real estate fund where people that are out here that want to just dump capital into somewhere because they don't want to do the research like what you're doing right now, figuring out whether Bitcoin's an alternative or not, is to set up a fund and extract some fees from those people who want to invest in real estate. It is, in my opinion, completely irresponsible to promote real estate at these levels with Bitcoin as a viable savings tool. Without Bitcoin as a viable savings tool, you got real estate, you got stocks, we can argue about that. But with Bitcoin as a viable savings tool, it is completely irresponsible to promote real estate at these levels with Bitcoin there as an alternative. I want everyone to be aware. Do the mathematical calculations. Understand why Bitcoin is a better store of value than real estate. Understand that one of the advantages of Bitcoin is a government can sit there and allow any money to go into Bitcoin, because if the value of Bitcoin goes to $10 million a coin, the average person can still utilize it for whatever they need to utilize it for. You can't do that with property. If they printed a bunch of money and all the money that they printed went straight into real estate values, the average person would be protesting in the streets because they can't afford the house that they're living in, right? So Bitcoin is the superior asset to real estate. And when you factor in the fact that you want to buy a $500,000 property, you got to put a $100,000 deposit down on it now, and you got these mortgage rates the way they are at, it is completely and utterly irresponsible to promote the idea of investing in real estate in 2023. Bitcoin is a far better asset, and it's much better to just follow the 3 rules of Bitcoin. Step number 1, you buy Bitcoin. Step number 2, shut the fuck up. And step number 3, you get fabulously wealthy.